The Hedgeless Horseman here. It's April 22. This video will be about the importance of knowing where you are. If you don't know where you are, if you don't know where you're going, that pretty much makes you completely lost. Then you don't have a game plan, then you don't really know why you should be making money in the future, because you don't know how really perhaps how you made money in the past or what actually transpired. And also, I would just like to again point out the fact that investing is about the future. It's not about the past. It's not about what happened in the past. It's about what could slash should happen in the future. So right now, I've shown this many times before. This is a graph I use to basically track sentiment in especially the junior sector, and even in particular perhaps the micro cap stock, let's say, the very end of the risk curve. Okay, what does this graph here tell me? It tells me the immediate past has been crap. Check. It has been crap. A lot of people are, whining about not being able to, to make money in miners. I mean, I see pretty large accounts, with large followings, complaining right now. Why are you even in miners? How can anyone be bullish miners? Yada yada yada. It's like, how can you not be bullish miners, especially juniors? If it should be pretty obvious that juniors don't spend too much time being this cheap. And we've had the pain. Had the pain here, had the pain here. Gone down to these levels. If you had no money invested in miners right now, if you just learned about the sector, let's say you were on a hiatus for X amount of years, but you knew everything you know now about miners. If you just came back to this chart, what would you do? Would you be bullish or bearish? I hope you would be considerably bullish. Why? Because low levels like this tends to precede very good periods in juniors. But what people are doing right now is that they're looking back on their recent experience, which makes them negative to juniors, because they've been losing money on paper since April of 2022. So their experience tells them that this is not the place to be, because it hasn't been, quote, the place to be. But again, that's irrelevant, completely irrelevant. It's about the future. I mean, in hindsight, you should probably have, let's say, at least been selective in the kind of stocks you buy here. This sentiment index is more, in my opinion, tracking like again, very end of the risk curve, optionality plays, etc. Like Bear Creek Mining and Strategic Metals, for example, is a quote boring prospect generator that at times becomes just absurdly cheap. Around these levels, it's trading for a enterprise value of 0, basically. So you don't need to know much else than if the market is pricing in such juniors giving nothing for their portfolio, that means the sentiment is absolutely depressed. Nobody is willing to take any risk at all. And obviously, the big swings comes from sentiment swings. When you go from completely risk off to risk on. So again, if you weren't invested in this sector, would you be, at what point in this chart would you be, let's say, positive on the future? I would say right now, for example. But most people's past experience cloud what is pretty obvious about the future, that the risks are to the upside. If you don't, again, if you don't get that, you'll never be comfortable probably in the minors. If you don't understand just how important and overpowering sentiment is, that at times like this, people, for whatever reason, just like to sell juniors. And no reason in particular. Typically, people are more inclined to sell something that's cheap and going down because it's been going down. So cheap becomes cheaper because the momentum is down and the past experience is terrible. Up here, people are happy to buy juniors. I remember actually around this period, I was talking to some friends and I was saying that it feels like I'm printing money right now. My largest holdings were just, going up, going up. So I know that feeling. I know what typically happens next. Because here people were buying, not because every junior was cheap or anything like that, because they were going up. They were after the momentum, so they couldn't overpay. Nothing felt like, paying too much. And right now, many stocks can't be, low enough for anyone to think that they're cheap enough, because it's not about valuation. This is about sentiment and momentum. And we're after the risk reward, best possible risk reward, best possible future we can come up with. In that case, you would obviously be bullish at a time like this. And knowing why do I think my junior portfolio will do well in the future? Because we're here now. Simple as that. Because sentiment is so powerful, and if almost everyone that's would possibly sell juniors this low, they're gonna run out of stocks one of these days. And you've already seen juniors move higher, which I'll show later. But and another great example, in my opinion, of the importance of knowing where you are. This is a pinned tweet from a young investor in Sweden from April 30, 2021, and you can read here. Here is being obviously kind of sarcastic. Top signal, sell everything. Note, I think that's this is just Google Translate. Basically, I think it said all-time high in the portfolio, and today I did my last working day. Now it is I think he wrote something about I think FIRE, the acronym FIRE, like financial independence, something like that, at the age of 24. So no, but now with the full-time stock, now it will be the full-time stock market for me. A dream, of course, to basically live and make a living on your biggest hobby. So he basically retired, let's say, and showed his profit just that year up until April 30. So from January 21 to April 30, he was up almost 4.7 million Swedish crowns, which is around, let's say, $500,000 to $600,000. Obviously, great rate of return. Like in 5 months plus $500,000-$600,000. So one can understand why he felt like, this is the time to retire. Portfolio at all-time high. Everything feels super easy. I mean, he basically, as far as I understand, owned 2 stocks, Evolution Gaming and Embracer Group. And he even had, he had some others, I guess, but mostly 2 stocks, and he used leverage as well. So he was levered up and was super concentrated. And Evolution Gaming and Embracer have been 2 of the absolutely most popular stocks among Swedish retail investors over the last years. And I'm going to show you two charts as to why soon. But just consider this thing. Okay, massive rate of return last few months, portfolio at all-time high, and then he decides that now is the time to retire. Because, I mean, he was obviously projecting said past into the future. If he would be making 4.7 million Swedish crowns every 5 months, I mean, that's, you know, if he starts projecting that into the future, he's going to be, you know, well, he's already a multimillionaire in Swedish crowns, obviously, but it's like, his past is, you know, clouding his judgment, let's say, of the future, or underappreciating the risks, etc. Because he's going out on top, pretty much. Because, okay, note the date here. Retired April 30, all-time high, super jacked up, great rate of return over the last 5 months. I mean, these two stocks were pretty much going straight up. What happened? This is literally when this guy decided to retire. And these are the two stocks pretty much he owned. He basically top ticked both stocks. And you can see here, I mean, again, on the notion of rate of return, let's say here, here's, December 30. So they had both stocks had been doing well, but especially Evolution Gaming went on a super tear. I think it went up like 100% in 5 months. So again, that's what he's, you know, going into retirement with. That everything is super easy. We had a multi-year uptrend. He's making money hand over fist every day, even using leverage and being in two stocks. So I mean, you could understand why this guy probably has somewhat of, you know, hubris. Because all he's known, for all I know, is success. Good times. And we know the stock market has been overall stock markets have been in a 13-year bull market, pretty much. So even if you're let's say, I'm not saying he's a bad investor, but it's like, you have a lot of room for errors if the tide has been that strong for that long. And like always happens, especially I've seen it in these two stocks, they did so well for such a long time that more and more people started concentrating their entire portfolios in these two stocks. Because they were just looking at the past all the time, obviously. It's like, at some point, people can't stomach not being a part of the train. But in my opinion, it's like, at this point in time, for example, you know, there comes a time where a company, just from, you know, the overall market cap size, it becomes hard to grow at the same rate it has grown. I mean, Amazon, for example, been you know, thousands of percent over the last decades. But at this point in time, it's kind of hard for Amazon or Apple to be a high grower, obviously, to have a short like it had in the past. So I would suggest that if growth stocks have had, you know, over a decade-long period of outperformance, for example, that should tell you that, okay, every passing day gets us closer to some kind of top, for multiple reasons. So since then, this guy, I mean, he used to be fairly, I think, active on Twitter, and, you know, celebrating every time these stocks reached a particular level, and many people on Swedish FinTwit did the same. But since then, it's been, I mean, he literally top ticked it. So at this point in time, when he's retiring, it's you know, blue skies, basically. He's looking at his past experience and like, Jesus, you know, I can't miss. I'm killing it. I'm literally killing it. This is so easy. Stock market is super easy. I made 4.7 million just in the last 5 months, or 4 months, for example. So that's what he's bringing into going into, like, it's time to retire because I'm so good, this is so easy. If I make 4.7 million every 4 months, why on earth would I still keep a job? What do you think he's thinking right now? Assuming he kept most of his money in these two stocks, which had treated him so well, and he used leverage during this time as well. What do you think is going through his mind right now when he's looking at a rate of loss of maybe 4.7 million over the last since the last top, let's say? And do you think he might, as things got worse, do you think he might be more or less inclined to use even more leverage to claw back his paper losses since the top? I think he's more inclined to add leverage because he wants to get back to this feeling he had here and to his all-time high portfolio, all-time high. So again, my bet is that he's taking on more risk because his portfolio has been going down at such a pace, and he's probably stressed out from the fact that he retired here and has been probably losing a ton of money on paper ever since. And like in poker, when you go on tilt, you typically take more risk if you're down because you want to make back the lost money as soon as possible. And that typically ends up making even worse decisions, again, taking more risks, going up in stakes, etc., putting more money at risk, and then instead blowing up your portfolio. So in my opinion, this is not typically a time to retire unless, in extremely good times, unless you don't plan to really be invested in the same stuff. Because if things are, if there's blue sky in your stocks, in sentiment, etc., that means there's a huge delta when sentiment turns down. Because at some point in time it can almost only get worse. And why I bring that up is because that's the opposite of this. He kinda retired, in this sentiment environment. So great past, felt like this was gonna go on forever, while the risks to the downsides were mounting. And then I don't know if he's blown himself up or whatever, he doesn't tweet that much anymore, so I'm assuming he's not having a rose experience. But we're in the opposite scenario right now. In the minors, in the juniors especially. Things can't get much worse, and if they get worse, they don't stay worse that much longer. The sentiment levels don't spend too much time down here, and they don't spend too much time up here either. So knowing, again, is like half the battle in my opinion. Why I'm super bullish juniors is because where we are right now, not because of the recent past where we have been since 2020. No, it's where we are right now. So if I was gonna, let's say, retire, I would want to have enough money right now already. I wouldn't want to retire now and think, I'm gonna, over the next years or whatever, I'm gonna live off my portfolio, because the risk would be to the downside. Now the risks are to the upside. So if you have enough to retire now, like this guy at a peak, he's probably burned a lot of money over this period. But if you have enough money to retire now when the risks are to the upside, that's a completely different matter. And again, this chart here, Newmont, major proxy, gold up here. I use Dolly Warden as a proxy for junior developers, the ones that have proven ounces in the ground, etc. So they bottom pretty much at the same time. Here majors bottom, Dolly pretty much bottom, and you know these have gone higher, especially majors done very well past the previous highs. Junior developers typically not past previous highs, but they been going up. The very end of the curve, and I'm using Bear Creek Mining as a sentiment proxy here. The highest risk stuff, the ones where sentiment has to be at least okay for people to be comfortable taking that risk. That's pretty much back to a bottom and has been going down since this time while the other stuff ran. So again, where do I think the risks are to the upside? In what subsector would this change in sentiment have the most effect? Obviously where it's most depressed. Obviously Bear Creek Mining has underperformed versus strategic metals, for example. So what I foresee happening is that the micro cappers are still, they've just gotten cheaper and cheaper and cheaper. So even though major sentiment is up, the very other end of the curve are still pretty much at extreme levels. What does that tell you? It tells you there's a lot of room for improving sentiment, because if a glass is pretty much empty already, it can only go down so much more until it's pretty much fully empty. But the delta from going from almost totally empty to full, that's a huge move. So if Bear Creek Mining was up here right now, for example, that leaves this much in terms of upside sentiment potential, and this much to the downside. And this chart is from December 13, 2021. This is part of my pinned tweet where I said bully, bully, bull on junior miners. Why? Because where we were, this is a GDX SPY ratio. I'm obviously in juniors myself, so this is majors divided by S&P. But you can see it's like recent past, obviously bad. Recent past here, obviously bad. Recent past here, obviously bad. So why on earth am I bullish? It's not based on past experience, because this was a shitty period, shitty period, shitty period. It's because the risks were to the upside. Because any time the sentiment got this depressed, there was a lot of room to move to the upside again. Simple as that. I understood where we were, and that because of the horrible past, we should have a bright future. Because of the horrible past, probably bright future, etc. And what happened? Sure enough, bounced. And major miners made an all-time high, even though GDX SPY ratio just got back here. It's not even up to this level, which has been, a top since 2014, or a top level. So again, you have these moves in the majors, and that's only with GDX SPY ratio reaching this level. And in my opinion, juniors are still down here. So they haven't even begun to move, but they will do these. They will get back here one day. So that's why I'm bullish. That's why I'm comfortable, because I know the risks are to the upside, just because where we are right now. But again, most people look at the past experience, the pain they're feeling right now, and can't see why you would be in minors, because recent history taught them minors is not something you want to buy, especially juniors. While common sense, while logic, while knowing how sentiment works, knowing that sentiment always swings, would tell you that if you saw this short, now would be the time. Because not many other times has the expected future been brighter than right now. Investing is about the future, it's not about the past. If you know where you are and know where you're going, that brings comfort. So please, like, I know the Twitter sphere is full of rampant negative sentiment and people complaining, but it brings me hope to see I have some followers at least, who, like, they realize what's going on. They can zoom out, see it for what it is. This is how the herd moves. And now the herd is out and it's going to come back one day. So you obviously want to capture this delta in sentiment swing by buying now and selling when the people who sell here, not at all being cognizant of the valuation or the massive gaps, they are the ones who are going to buy it from you later, because they won't be thinking about valuation then either. They will just be projecting, like, this guy that, okay, my recent past is great, so my future is gonna be great. Whereas this was like super good, and then you had a change in sentiment, etc. So just to reiterate, for the love of God, if you want to beat this market, if you want to be one of the few that actually can outperform an index and actually, let's say, possibly making a living on investing, see these movements for what they are. And don't be paranoid thinking that, I recently got a question during an interview, why I'm so convinced that sentiment will change. Why I'm convinced that sentiment will change is because it always changes. That's the only thing I know, except for what price I pay for any stock at any given point in time. Those are the only two fixed things you can know. That sentiment always changes and what price you pay. So if juniors are absolutely dirt cheap right now, they can get even cheaper. They can stay cheap for a long time. But sentiment always changes. So to me, it's like, yeah, maybe there's like, I don't know, 30% downside, and I'm talking price right now. But what's the upside risks? Upside risks are hundreds of percent. And it's gonna happen. You will see ounces in the ground that currently perhaps trades for like, $20. They'll trade at $100 one day, like always happens. So I hope, again, like, you really need to understand these concepts. Otherwise, if you don't know where you are or where you're going, you don't know why you should be buying now and why you're gonna win sometime in the future. And also that the past, the worse the past is, the better the future becomes. The better the past is, the worse the future becomes. I mean, again, blue sky type feelings, making money easy, that's a signal that, this is going to turn one day and then it's going to be pretty bad. And the opposite is true. When it's been super hard to make any money, that means pretty much everyone that has thought about selling has already sold. So one day they are going to be out, and then the only way the glass could go is from almost empty to full again. Again, really important thing. and forget about price of gold or silver or whatever. It's like the juniors aren't tracking that anyway. It's about sentiment. It's about how the masses move. They move in one way, then they move in the other way, then the other way. So now we're down here, which means that if there was any a time, akin to these times here, you would want to be in my opinion, juniors. And I have never seen such a gap to gold or majors. So again, it's like this is, in my opinion, the hands down most obvious. If I mean, imagine being so lucky to find the junior mining space right now. So you get into the space like, okay, if you knew these kinds of things, like, wow, okay, Jesus, sentiment is at a bottom, and then wow, juniors have probably never been so undervalued relative to the majors or gold. It's like, how can you ask for? I don't expect to ever see a setup like this for the rest of my life, perhaps. So when you see people complaining about juniors right now, that means they're all about the past experience and have no idea. I don't think most of them will even make money. I mean, you can tell from one tweet or whatever. I mean, I think I'm pretty good at telling who actually, beats the market or whatever, because it shines through their mentality in one tweet if they're belly aching or whatever. But I have hope, because I see some private investors out there. They do realize this. They are quite, calm about it. It's like, yeah, this might go on for months more, etc. But they realize what this is about. We're at an ebb here, and it might go like this, it might go like this, it might take many different shapes, let's say, before we reach a sentiment high again. But that's really, in my opinion, good to see that some people really understand the situation right now, and they know that they're exchanging pain right now for rewards later. And again, if things almost can't get better, they tend to get worse. If things almost can't get worse, they tend to get better. And we're gonna see a lot of for as long as for long as the market exists, we're gonna see this kind of stuff. So the quicker you can grasp these concepts, the more money you're gonna make in the future. Thanks for listening. I hope I hope some of these concepts hit home. Thanks.